Hi, welcome to Neppy Invests. Exciting times in the Neppy Invest office as I do my final video of the 15 ASX stocks I'll be watching in October 2020. So finally I got to the end of this series and I've gone through the other 12. You can look at my previous videos on that if you haven't seen them. But today I'll be talking about three companies. Two of the companies are quite similar, the same sort of field, Tesserent and ARCTIS. They're sort of in the cybersecurity or security sort of area, and Zoono, which has a soft place in my heart, or mostly because I did have a really good learning experience because of Zoono, and I've actually changed my investing philosophy because of Zoono. What happened about almost 1 year ago, and you'll have to wait to the final slide for that information and why I changed my investing philosophy because of Zoono. But first, we're going to talk about Tesserent, a very explosive company, Tesserent, ticker code's TNT. So I did say explosive as a pun, but they do call themselves Australia's #1 ASX listed cybersecurity provider. That's not me saying that. That is actually Tesserent saying that themselves. They are an acquisition-hungry company, so they've made 7 acquisitions of businesses in the past 15 months. And you can see the result in cash receipts on the left-hand side there. It's just exploded from $1.3 million in July 19 to $12.3 million previous month. Now, trying to attain growth through acquisitions is not always a good thing. A lot of companies can't succeed in doing that. Hello, Paragon Healthcare. Yes, I'm looking at you. But, and I think there is even some research that just show that instead of being value creating for shareholders, it can destroy value instead. And that's mainly to do with the larger cap companies. Tesserent is a smaller cap company. So maybe they can make this work, but there is some risk there around their acquisition model of obtaining growth. And you can see the first 3 years there on the cash receipts, they weren't getting any growth whatsoever in their traditional business, going from $1.3 million April 16 to $1.3 million cash receipts in July 19. And the other thing we've noticed in the past year or so is the shares on issue have gone from around 100 million or above 100 million to 511.8 million. So they're really diluting shareholders, but at least the share price is going up to match that dilution. So they are creating a little bit of value there for the shareholders, and the market cap about 128 million. So even though they've increasing that revenue to 20.2, they're still operating cash flow negative, although they did report in one of their announcements or presentations that they are EBITDA profitable for June quarter, and they did see some operating cash flow. They were operating cash flow positive for the June month. So I'm interested to see what this next quarter is going to be like in terms of operating cash flow. Maybe they can succeed in this acquisition model they're undergoing right now. And they've had a couple of tailwinds behind them in the last few months. So we've had some cybersecurity issues in the country, and we've noticed, we've seen that the government is willing to put a lot of money into cybersecurity, and they've been one of the beneficiaries of this TNT. So the share price go from about 7 cents all the way up to a high of 30 cents. Share price has been leveling off the last few months, still a little bit of volatility there, but it's sort of developing a base, and we're starting to see those moving averages trying to get towards the share price. So interesting to see what the next quarterly cash flow report does show. If they are cash flow positive to a high extent, we might see the share price get above 30 cents. Bit of resistance there, and that will be quite bullish. I think if the share price gets below 20, that'll be quite bearish. So at the moment, I'm just interested to see what that 4C says and then how the market reacts. ARCTIS is a little bit different than Tesserent, so their ticker code is AR9, and ARCTIS stands for Architected Trusted Information Sharing. So it just means that their security platform, which is called Genesis, just allows government and industry to share classified information freely or securely, I suppose you could say. You see cash receipts, not much happening there for the past year or so. So the ARCTIS story is all about the potential for future growth, significant growth in cash receipts over the next year or so. And they do have that potential because some of the announcements are quite promising they've released in the past year or so. So market cap has grown to $67.2 million much less shares on issue than Tesserent, with only 164 million. Only revenue 549,000. So again, this is all about the future growth in the next year. And again, the market is liking the ARCTIS story. Grow heavily from about 7 or 8 cents all the way up to sort of hovering between 40 cents and 60 cents. Once the share price gets between 50 and 60 cents, there is a bit of selling there. So definitely the zone between 50 and 60 cents is a resistance zone. You can see those wicks on those candlestick candlesticks, days, whatever you call them. They're quite long, which means there's a bit of selling. So it just means the high of the day and the close of the day are quite far apart, which just means there's a fair bit of selling. But anyway, it's the last 2 months, it's just been sort of trading between 60 and 40 cents, forming a base. That's quite, well, it's very normal and something you really want to see if you are a long-term holder of ARCTIS or any company. You want to see the share price at some point in time just develop a base. It's very healthy for share price performance. You just don't want to see a share price go up and up and up. It's not healthy at all. Cash receipts are only 190,000 last quarter and cash flow negative, so I don't want to really dwell on that. They're all about the future potential, and that's why I'm interested to see the next quarterly cash flow just to see where they're heading. And the last company I'm going to do in this series is Zoono. I did learn a very valuable lesson with Zoono exactly a year ago. So this company, you might have heard of them because they do some antimicrobial solutions. So, you can put it on your hands and protect yourself from nasty critters, nasty bacteria. Not all bacteria is nasty though. And you can just see what's happened with their cash receipts during COVID-19. Net's just gone boom, 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 boom. It's gone from 588,000 all the way to 9.9 million to 19.8 million. And if I remember correctly, they did get $10,000 or $10 million of cash receipts in April, then 5 million in May and June. So seems like the peak panic period around March, April was their peak in cash receipts. At $1.82, they do have a market cap approaching 300 million, but you can just see the revenue there. In brackets, that's a number is the previous year's revenue. So it's gone from $1.7 million in revenue to 35.8. That's significant growth. Whether they can keep that up, and just like share price sort of forming a base, you don't necessarily want to see that with revenue. We'd like to see that keep on growing. But I think it's going to be hard for them to see very significant growth in the cash receipts this quarter. But I'd like to see that try to get above 20 million. It's sort of what I'd like to see. And operating cash flow 7.6 million positive compared to minus 2.8 million the previous year. They do have now a dividend, which I think was 3 cents. So I could have bought this company at 9.5 cents a year ago. So that would be a 33% dividend yield. Good, valuable lesson, which I'll show you what happened in 2 slides. Share price for the past year has gone really bonkers. And a lot of the bonkerness, if that is a word, was actually before COVID-19. So if you look before January 20, which is, you can look at my mouse here, right there, it went from about 9.5 cents all the way up to about 80 cents. That's almost an 8-bagger before we had COVID-19. So then we had COVID-19, and that was a further tailwind that really popped up the share price, I don't know. And it kept on rising to about $3.20 or so, and then we have seen a bit of a short-term downtrend develop in the past few months, which is really interesting. So I'd like to see this go down a bit further, because if they can continue this story going, it's actually a very interesting company, Zoono, and they're not highly valued, I don't think, based off the cash receipts and the potential for operating cash flow through 1 year. So they had operating cash flow of $5.3 million the previous quarter. If you times that by 4, and I know you shouldn't probably assume that if you get $5 million in 1 quarter, you can say that's $20 million for 4 quarters, but that would mean they're 10 times operating cash flow, which is not that great for a company like Zoono, especially with their growth profile. But the next slide I'm going to show you, the final slide of this series, is what happened in October, 14th of October 2019. So they released the 4C on the right, only $1.2 million in cash receipts, so it's not that much Cash flow positive to the tune of $1.99, but I liked it. The market liked it. And I could have bought on open at 9.5 cents. In fact, I did have the buy trigger ready. But one of my investing philosophies is just be patient. Just see what happens with the market. So just because the market, or just because you like it, the market may not like it as much, and you might, get it in a little bit lower. So it did pop up in price. In fact, it popped up to the tune of, I think it closed on the previous trading day of 14th of October. It opened up at it closed on about 6.7 cents. So you can see why I might have been a little bit hesitant. So jumping in at 9.5 cents when the previous day it closed at 6.7, I just thought maybe there's a chance to buy in lower than 9.5 cents. That was the low, and it continues to be the low. You can see share price went up 34% that day, 36% the next day, fell 10% on 16th of October, then it rose 11%, fell 3%, and then rose 21%, and then just kept on rising to the end of the year and keeps on rising. Well, it's not rising now, it's in a bit of a short-term trend. So even though I'm a big fan of being patient, there is a saying that investing is just the transference of money from the impatient to the patient. That is proper investing. There is times when maybe not being patient is good, and this is sort of an example of that. So what I've done is I've adjusted my investing philosophy to the point where, in an example like this in the future, what I'll do is I'll put a little bit of money into the company at open, and then if it comes back, I'll put a little bit more money in. But then if it keeps going up in share price like Zoono did, I've got that initial investment in there. So that's the plan for the future. And the whole reason I follow Appendix 4Cs or quarterly cash flow reports is exactly what happened to Zoono. It happens quite regularly, this sort of thing. And I'm on the lookout for companies like Zoono. So hopefully this quarter we'll find some companies like Zoono, and I'll get to report it to you, and we can follow these companies through the next year and so, just to see what happens with them. So good luck. Hope you follow, start to look at these quarterly cash flow reports as they come in and get excited just like I get excited about them. I really like this time of season. It's my favorite time of season. I also like the annual reports and the half-year reports, but this is it. This is where you get these really good returns from companies like Zoono. So here's to the next Zoono. You're out there. I may have never heard of you before, but you're probably out there, and I hope that I will buy you when this sort of thing happens. So that's all for today. Actually, got one more slide to go because I've got some things to say. And of course, I've just got to say, look, I'm not a professional advisor. I'm doing this video for entertainment purposes and also to learn some stuff. I'm learning a few things from my subscribers and people who comment on my videos. So leave a comment on my videos. I try to check all my comments, and if you do request a video that I do for a company, just do a request or just ask me to look at this company and I'll look at this company. So I'm always interested in looking at companies. So I'm not a professional advisor, and if you do need professional advice, make sure you seek out a professional. Maybe one day I will become a professional, but that's not yet. So that's all for today. Have a good day, and I'll talk to you later.